Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram here with Ken Shreve. And Ken, it was not a great way to cap off the week. We're going to dive into the major indexes, but give us a rundown of the stocks we're going to be talking about. We usually talk about actionable stocks, but today we're going to take a look at some popular names that got hit pretty hard.
Yeah, Nike down sharply in the Dow Jones today after reporting weak earnings. And we're also going to take a look at Facebook, which is testing support at its 50-day moving average. Shares plunged today. And also take a look at a software stock in the Market Smith Growth 250 that bucked the trend.
Yes, but first let's take a look at those major indexes. This is a chart of the Nasdaq, which finished down about 2.6% for the day, with another trip to that 21-day exponential moving average there, Ken. So some weakness to cap off the week, and we didn't really see any relief into the close.
No, the Nasdaq did close pretty much at its session low, but you can see that 21-day moving average has been a support level for several weeks for the Nasdaq. So that's the key thing about these major stock indexes. We'll take a look at the other two as well that are all kind of testing key support levels here. Next up is the S&P 500, and you can see it made a nice bounce off the 200-day moving average on Thursday. That's when financial stocks outperformed. Financial stocks were among the weakest performers today. You can see the S&P 500 gave up its 200-day moving average, but to its credit, it's holding above 3,000. So that's at least a bright spot. And then finally, the Dow, it had been getting some resistance at the 200-day moving average, and you can see right now it's testing another key support level, closed just above its 50-day moving average. The Dow did break below the 25,000 level. At one point today, it looked like it managed to close above it, but pretty rough session for stocks today.
That it is, but we do analyze the Nasdaq the most in depth, I would say, because a lot of the growth stocks that we're tracking do tend to follow the Nasdaq. So that 21-day remains very key here, doesn't it?
Yeah, no question about it. It's been a very solid support level for the Nasdaq in recent weeks, and it really didn't make much of an attempt to bounce today. Of course, the coronavirus is a big sore spot for the market. Looks like we had 40,000 new cases in the U.S. on Thursday, and it looks like we're going to be at least that amount today. So that coronavirus is spreading perhaps a little quicker than what was anticipated, and that's a trouble spot for the market. We also had pretty heavy volume in the market today too, so it looks like a distribution day count is going to be added for the S&P 500 and Nasdaq.
All right, well, we'll have to see what the next week brings for the major indexes, as they are all, like you said, around these key support levels. But let's take a look at some stocks in the headlines today, starting off with Nike, plunging almost 8% in heavy turnover here after reporting an unexpected loss and disappointing sales. So it has now taken a trip down to its 50-day line after it looked like it was setting up, the right side of a handle there, but a lot of damage today.
Yeah, and this is another stock that really didn't make much of an effort to rally off lows. It is still a test of the 50-day moving average, closed just below that key support level. Listen, the numbers were expected to be pretty weak at Nike, and they were. The problem is they were a little worse than expected. I suppose the bright spot was that digital sales were up 75% in the quarter. That's a sharp acceleration from 36% growth in the prior quarter. Digital sales now make up 30% of total revenue. Nike's original forecast, they wanted digital sales at 30% of total revenue by 2023. So they're well ahead of that pace. And CEO John Donahoe said that they think digital sales could be 50% of total revenue in the not too distant future. So digital sales a bright spot, but sales in North America very weak, down 46% to just over 2 billion. So digital sales strong, but just about every other metric not so good at Nike.
Yeah. And FANG stock Facebook taking a big hit today, Ken, plunging over 8% above average volume, closing, it looks like, below its 50-day line as more and more big brands announcing that they're pulling their advertising over an issue that essentially boils down to censorship. But if that means a reduction in revenue for Facebook, investors are not going to like the sound of that.
Yeah, the stock was not down that much in after hours trading on Thursday. That's when Verizon said it was probably the biggest name advertiser to pull advertising. They announced that after the close Thursday, but this morning it was Unilever that joined the ranks of companies that are pulling advertising. They want Facebook to do more on, just sort of banning hate speech on the platform. And sure enough, Mark Zuckerberg came out late in the session today and said that we are going to do it. And that's really an about face from, prior comments from Zuckerberg that they're just a platform and they're going to protect the First Amendment. But it looks like a shift in course for Zuckerberg because they said they are going to ban hate speech on the network. So this is, Facebook and some of the other FANG stocks under a lot of regulatory scrutiny. And this is a stock that really did not make any attempt to rally off lows, closed right at its 50-day moving average. This is a key support level to watch, but a lot of big sellers in Facebook today.
Yeah, and in terms of handling a position here, we were calling out this handle area as a place to buy, also clearing this consolidation here. And even when it, cleared the 240 level, potentially an area to add shares. But the weakness today, I mean, the first signal, it moving below that 21-day line, an area that it had found, support, in the past, and just continued to get worse and worse throughout the session. So we were advising this morning on IBD Live for investors to start trimming their positions here, given this weakness.
Yeah, and we actually trimmed the position in our leaderboard portfolio today. The other thing to note is just the volume that came along with today's decline. You see this big spike in down volume, that red bar, and you look back in recent months, and this is the heaviest volume for as far back as you can see. Just stretching all the way back. So, this is even though it wasn't a decisive break of the 50-day moving average. There were some sell signals in Facebook today. So, we are, I guess, giving it the benefit of the doubt. We're still holding on to a little bit because of, it's not a decisive break of the 50-day, but we lightened our exposure.
All right, well, we'll have to see how it acts at that level towards the beginning of next week. But RingCentral gained over 3.6% today in some nice volume, clearing a little short resistance level here.
Yeah, I know the guys were looking at this for swing trader, but I would say this 292.48 pivot, it was a legitimate entry. It closed just below that entry, but volume is above average, and there were actually a lot of stocks up in the Market Smith Growth 250. Not only RingCentral, but Big Lots, the retailer, ticker BIG, that gave pretty good earnings guidance, and also Fastly, which is a stock that we talked about on IBD Live today, ticker FSLY. So, some bright spots in today's session, but there were definitely big sellers in the market today.
That's right. RingCentral, make sure to keep that one on your radar. And yet another strong name in the enterprise software group, which just seems pretty unstoppable right now. So much strength out of that group. We definitely like the look of that. And we will be talking about more actionable stocks and portfolio strategies on Monday morning over on IBD Live. So make sure you check that out. More information can be found at investors.com/IBD Live. Thanks for joining us today, everyone. And we'll see you right back here on Monday.